This is Bryce Norris, Senior Editor of Farm Futures Magazine. Welcome to Farm Progress Dateline Drought, our continuing coverage of the 2012 drought, brought to you by Genuity Drought Guard Hybrids. After some big private production estimates last week, the soybean market was already backtracking this week, fearing a big production estimate from today's USDA report. The government indeed came out with a very bearish estimate, a 2.971 billion bushel crop, 111 million more than its last guess, and well above trade estimates. While USDA said strong demand would use up most of the additional supply, the market wanted to hear nothing positive about soybeans today. Its reaction was swift and bearish. After testing October lows ahead of the report, beans quickly sunk deep into the red, filling a gap from July 4th and then some. July beans barely held its 200-day moving average, last-ditch support that for now forestalled an even deeper break that could take the market down to the 1390 level. As it was, January beans finished down 44.5 at 1451 and a quarter. Wheat also tumbled, suffering double-digit losses in Chicago and Kansas City after USDA slashed its forecast of 2012 crop exports by 50 million bushels. Some type of a reduction wasn't unexpected due to the slow pace of sales in the first 5 months of the marketing year, but traders weren't expecting quite as large a cut because hopes for U.S. originations were finally looking better due to a series of production problems around the world. Still, old crop prices received some support from concerns about new crop hard red winter wheat, which looks to remain under stress into winter. Chicago December lost 16 to 886 and a quarter. Kansas City was down 14 3/4 to 922 and a quarter, and Minneapolis ended 8 1/4 lower at 941 and a half. Corn fared the best of the bunch in Chicago. Yes, USDA raised its forecast of production by 19 million bushels to 10.725 billion, but traders who were looking for a cut believe the crop could indeed get smaller in January if USDA's final survey of the year finds increased abandonment. Corn ending stocks went up just 28 million bushels, keeping carryout tight at 647 million. Still, there's potential for prices to remain flat well into December. That territory was staked out today. December held the recent lows at 732 and a quarter, then rallied just above its 100-day moving average at 754 before easing. December closed down 2.5 to 738 3/4. Keep up with the drought situation across the country by visiting www.datelinedrought.com.